important than Snehi, Federal Reserve's Jerome Powell has hinted at rate cuts possible later this year. In his prepared testimony ahead of the Senate, Powell has reiterated that the central bank is still waiting on inflation to come down to the 2% target. Listen in to what else he had to say.
Remains above the FOMC's objective of 2%. It has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As the labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. What we've said is that the committee would like to see more data that confirm and make us more confident that inflation is moving sustainably down to 2%. We have some confidence of that. Headline inflation has moved down more than 3 full percentage points now to 2.4%, as I mentioned in my remarks. We want to see a little bit more data so that we can become confident and so that we can take that step of beginning to reduce policy rates. It's a very important step. We think because of the strength in the economy and the strength in the labor market and the progress we've made, we can approach that step carefully and thoughtfully and with greater confidence. And when we reach that confidence, the expectation is we will do so sometime this year. We can then begin dialing back the restriction on our policy.
Well, all right, that's the word coming in from Fed Chair Jerome Powell. But let's stay with the commentary from Federal Reserve officials. And Minneapolis Fed Reserve Bank President Neil Kashkari, in his latest comments, signaled that the strong economic data will likely make it appropriate to cut rates only twice or even only once this year. The Fed does want to avoid a downturn, he said, and to stick a soft landing where inflation falls, but the job market does not collapse, as it historically has done when the Fed has waged a battle with inflation that's been too high.
And keeping it with central banks, then Egypt has gone ahead and hiked interest rates by 600 basis points. Not just that, on the back of the bank's currency devaluation, the Egyptian pound hit a record low against the dollar. Meanwhile, Bank of Canada kept its key rate steady at 5%, largely in line with estimates, but dashed the hopes of borrowers seeking relief, saying underlying inflation meant it was too early to consider a cut.
Well, and struggling regional lender New York Community Bank Corp announced a $1 billion capital raise, like we mentioned earlier in the show, and the majority of the investment for $50 million coming from former Treasury Secretary Stephen Mnuchin's firm. The bank stocks plunged more than 40% after reports said that the bank was seeking a major cash infusion. Ultimately, the shares of NYCB closed 7% higher for the day.
And global investment banking firm Morgan Stanley has reportedly laid off around 9% of its asset management business unit in China. This would be the first time Morgan Stanley has cut staff at the China fund unit since it bought out its local partner's 36% stake in the loss-making business for about $54 million in 2023. It rebranded the unit as a wholly owned subsidiary in June.
Well, and with Women's Day